Hello and welcome to Crux Investor. We caught up with Stewart today, CEO at Orefinders. We talked to him about the recent deal with Kirkland Lake. Shareholders seem unhappy, but Stephen explains why it is a great deal. We also look at what he's going to do with $7.5 million of cash and the timing of that for the rest of this year. If you want our thoughts and opinions on the conversation, you can find that at cruxinvestor.com/club, where you can also find detailed company reports and analysis. There's commentary from experts from around the world on a variety of companies and commodities. There are training courses on there. We've got summaries of all the interviews that we've done to save you some time because we know you're busy people. But most excitingly, we have a wonderful, thriving group of investors sharing their thoughts and ideas with each other in a nice, friendly and safe environment, free from all that trolling, judgment and abuse. So I hope you think that sounds nice because it really is. Go and join them at cruxinvestor.com/club. And we'd love your feedback too. So give us a like, leave your thoughts below. And if you want to see precisely what we talked about today, do take a look in the description below. Stephen, how are you, sir?
I'm doing very well, Matt. And yourself?
Not too bad. Haven't seen you for a while. What have you been up to?
It's been a while. I've been keeping my head down. We've been drilling lots of meters. We've been doing lots of deals across the portfolio. But of course, I'm here to talk about the big deal we did with Kirkland Lake Gold between Orefinders and Mustango. We announced it last week. Big numbers, big partnership. I think a lot of confusion on what it means and the implications. But I'm absolutely thrilled about it. It was a long road to get here, but here we are.
Okay, well, I'm going to find out why you're thrilled about it and why your shareholders aren't in a second. But for people new to this story, coming into it afresh, give us that 1 minute overview and I'll pick it up from there.
So, of course, we've got the Ore Group here, but again, I'm going to talk about Orefinders and Mustango specifically. They are two juniors that are operating primarily in the Kirkland Lake District of Northern Ontario. Their market caps are roughly in the $20 million range, respectively. When we close these, the private placement transactions with Kirkland Lake, between the two companies, we'll have over $15 million in its treasury, so we'll be cash rich. And of course, everything is basically split 50-50 between those two companies, so it's around 7.5 each. Each company is currently drilling right now, but we're getting closer to the tail end of the drill program on Orefinders Night project, as well as the Kirkland West project, which Mustango has. And then we are going to be focusing on new drill programs. I think we're going to go back and do phase 2 on both of those programs. And then there's other drill programs that we've been laying the groundwork in terms of doing geophysics, et cetera. But in the immediate term, we're going to be sitting down with our new partners, Kirkland Lake Gold, massive company, knows the area probably as well as anybody. And we're going to be putting our heads together and designing new programs, new things. It's very exciting. It's
very exciting for you. What we've got is a lot of disgruntled shareholders writing into us and going, this is the worst deal imaginable. You're saying the opposite. So why do you think it's the best deal that you could possibly have done? Would you do it again, for instance?
Well, absolutely. I'd sign it tomorrow without even blinking. This deal was in negotiation since December. It was a bit of a roller coaster. There's a lot of moving parts to this. Did I say it's the best deal imaginable? Certainly not. There's always a better deal, but this is the best, absolutely the best risk-adjusted return deal we could have provided for our shareholders.
What does that mean? What do you mean risk adjusted? That sounds like excuses. Have you given away too much at the front end, hoping for something big at the back end?
No, we haven't given away. We have a massive exposure. We have in effect free carry on all of our projects until Kirkland Lake spends $120 million. Those are significant sums. We are in a very risky industry here, and I am, believe it or not, as risky as I am in this industry, I'm fairly risk adverse. Did we give away upside? Of course we did. There are no free lunches in this industry. If people had the expectation that one drill hole is going to provide $1 billion market cap, now that's possible, but the odds of that are not, overwhelmingly. So I, in effect, forward sold some upside in order to drastically cover our downside. We're building real businesses here. We don't want to be in this drill bit speculative business where we live and die off our most recent drill hole. I mean, let's look at Orefinders. Orefinders has been more advanced in releasing its results. We've had intersections 15 half ounce over almost 4 meters. Another intersection half ounce over another 4 meters. So pretty decent intersections in established areas. We traded up, and then a week later we traded down. So you really have to think longer than just your most recent drill results. And we're thinking years down the road here to develop a long-term partnership. We're well capitalized. And I think it's important to note this financing doesn't expose us to, call it, the retail and institutional investors like we did back when we did significant financings in both companies in October and November. And I think the reason, we're down almost half from our highs. So the whole market's down substantially, but I would say we're down more. Why? Because that 4-month free trading hold paper came off, gold fell out of favor, and people traded us down. Now, going forward, of course, we still have lots of shares in retail hands. However, this money coming in is not going to flip us. So I think going forward, we have much stronger hands. We have absolutely no desire or need to raise any additional capital. We can focus on the work, and we can do so with the benefit of one of the best operators around, certainly the best operator in our district, no question about it.
But you've got money, but not much to do with it. What are you going to do with this money? How are you going to create value for your shareholders other than sitting around waiting for Kirkland Lake to do their thing? And that's assuming they continue to do their thing and they find what they need to find, which is going to be something significant. Otherwise, I guess you get it back on your lap, don't you?
Well, absolutely. So part of the transaction is Kirkland spends, as noted, $60 million in order to earn 75%. If they want to accelerate that at any point in time, they can do so by paying a premium of 125% of that 60 million. So they have to pay 75 million in cash to the company should they just not want to drill and just take it on tomorrow. They have that option. Gross that up, that values our assets respectively in each of those companies at $100 million. Not bad economics considering our enterprise value is $14 million. Now, that's what they're going to do. And as you said, if they decide, oh, well, this isn't what we thought it is, they can hand us back the keys. And that's fine. That's what an earn-in option is. They don't earn that interest till they spend that money. In the meantime, between the two companies, in Orefinders and Mustango, we've got $15 million in cash and effectively nowhere to spend it.
I know, but that's my point. That's my point.
That's your question.
You're out of control, Stephen. You're out of control. You got $15 million, which is great. What do you do? Sit on it and wait for something to happen? What happens next?
We're going to Vegas. No, we are going to be looking at opportunistic consolidation opportunities that fit our mold. I think anybody who's followed me and our two companies know we've had a consolidation model over the past few years. And in the last year, we've switched over to the drill bit because the cost of capital and the availability of capital is there. And I believe in the secret to our success is going to be don't stop drilling. And we're going to be doing that. Now, on top of that, we're going to be adding in the optionality of opportunistic consolidation opportunities to take us to that next level. We want to get to the 100 million, 200 million and beyond. We have the opportunity to do that with the drill bit, with this funding, and we have the opportunity to do it through creative mergers and acquisition opportunities, which I think our group has demonstrated time and time again that we've done. So stay tuned.
You have, but I think there's going to be, I suspect there's going to be a lot of roll-up opportunity. So you talk about in your mold. Remind me what that looks like, because I think there's a lot of stock which has been promotional over the last 18 months. It's momentum driven. The fundamentals aren't there, and totally. They're overpriced. Right? There's a lot of that out there. You're not going after that, clearly. What are you going after? Or what would you hope to go after?
I think that people should expect us to look at opportunities that are substantive and in our backyard and complementary to our existing asset portfolio. You look at Mustango and Orefinders, they're not scattered across the country. They are, with as the crow flies in a very, very tight radius. That is by design. And so we are building ourselves, growing our portfolio so that we become so attractive that we have to be taken out, or we have an economic opportunity that's discovered that we can develop organically. So again, expect us to look at third-party acquisitions, whether that's company level mergers and acquisitions or substantive assets. And there are a few in our neighborhood, which are multi-million ounce, that we've had our eye on for a while. So, and not only do we have that 15 million in cash, we have a really strong partner who's got much deeper pockets than we'll ever have. So we are a partner with KL Gold and expect us to do substantive and interesting transactions, which are going to be beneficial for shareholders. They're going to have faith that we can follow through. I think we always have.
So why do you describe them as a partner? They're doing an earn-in. That doesn't make them a partner, does it? What are you going to be doing
Well, they are. I mean,
with them?
They are absolutely our partner. It's did you read the news release? They're a strategic partner. But
that's what you say. But what does
it?
it mean? I can read those throwaway phrases, but what does it actually mean? They're not going to work with you. They don't need your help.
That means they're a 10% equity holder in both companies. So I'm not sure. I don't think they're our largest shareholder. I think Eric Sprott is respectively the largest shareholder. I'm the third largest shareholder in both companies personally. And they're partners at a property level. And then going forward, I assure you, we're going to be talking to them. If we're going to be doing these substantive moves, I want the buy-in of our substantive shareholders. And they allow us that flexibility to write bigger checks if we need to going forward on any substantive.
So that seems two.
So I'm not going to speak.
That seems two things, Stephen. That seems that $1.5 million means a lot to them, 10% of your company. It also assumes that they're going to follow their money on your future deals, and that's not necessarily guaranteed. So a strategic partner, is that an honest appraisal of the situation, or is it just all about the $120 million that they're obliged to spend, or not obliged, you hope they'll spend to develop the assets which you've just handed them?
Well, no, I think even $120 million isn't big money for Kirkland Lake. They are a $13 billion market cap company with $800 million on their balance sheet, and they probably free cash flow more than that in a quarter. They've got a tremendous balance sheet, tremendous strength. I don't think this deal moves the needle for them today. Are they interested in our land package? Absolutely. They've got we are the largest landholder outside of Agnico Eagle in their namesake district. The Macassa truly is their flagship project. And we form both the eastern and the western extensions of them. Tony McCooch, who's obviously the leader of Kirkland Lake and has been for some time, knows our areas intimately, both the Kirkland West project, which is immediately adjacent to the Macassa. We believe it's the extension of the Macassa. There have been 7 mines going east to west, and Macassa is the 7th mine. We believe we have the opportunity to be the 8th. Obviously, Kirkland Lake agrees to some degree. Otherwise, they wouldn't have paid us any attention. They didn't invest north. They didn't invest south. They invested west to us. That's where the mineralization goes. Additionally, Tony has a lot of history on our Knight project. And so the Knight project is adjacent to the Juby, which is a 4 million ounce asset to our south there. So there's a completely separate district that is, attractive to big mining companies. And now they've got, I'll say it again, now they've got a partner with a toehold in these districts that isn't necessarily them. Not that we do and act whatever they say, but again, we discuss, we talk with our partners, and we make strategic plans. The Knight project's over to the west. Now you want to go over to the east. There's multi-million ounce assets within 10, 15 kilometers. There's the Kerr Addison, which is a substantive asset, which all the big guys have looked at. It's sitting there waiting to be taken over and to be developed. This whole district from the border of Quebec on the Cadillac Break way over to Shining Tree, that is our area of interest. I believe that's also Kirkland Lake's area of interest. And we're both going to continue to exploit opportunities there for our own benefit. But I certainly hope that Kirkland Lake participates. They don't have to, but they're going to hear about it.
Do you think you've got the wrong type of retail investors in here? Because they seem keen that you do things quicker, and you're talking about opportunities which, although vast, will take time to monetize, will take time for value to be created.
Well, look, I don't think I have the wrong type of retail investors. I think they have the exact type of retail investors that exist in this market. They want fast returns. And I promise you, tomorrow things could change. Okay. We are drilling as we speak. If I come out with a blockbuster drill hole, well, things change very quickly. And so we always have that opportunity. And that's why I say, don't stop drilling. But, we can't live or die on that alone, or you could, but I think it's much better. And here you go, on the risk adjusted return basis, to have sort of not a fallback plan, but again, where else can we add value outside of the risky industry of living and dying on the drill bit? And that's what we're going to do. When you think about, I mean, just as an example, Mustango River Resources, about a year and a half or maybe 2 years ago, I acquired 31% of that company for $250,000. Okay. It ran up to a $40 million market cap. Now it's back down to 20, but that's what, that's the type of opportunity. Not that to say that I can repeat those types of returns, certainly possible, but that's how we gain control of Mustango. I don't think those types of returns are available in this market, at least to sort of buy distressed assets in a down market like that, because things have become more expensive. But those are the type of opportunities that I will be seeking, to grow exponentially and create more optionality. And ultimately, it's about getting more steel into the ground on great projects.
Right. So let's talk about that. Okay. I'm giving you a hard time about Kirkland because a lot of people out there don't understand why you've done it. You defended that. I don't necessarily mean you're right or wrong. You've made your case. With regards to the money that you've now got, and let's just stick with Orefinders because that's what we're talking about today. Is like you talk about putting steel in the ground and drilling and so forth. Where, when, how much, to what ends? I mean, what's the plan?
Okay, well, look, as of a week ago, I could have been very specific about that because we'd be spending our treasury dollars. Now I'm going to be a little more cautious on say exactly when and where because I've got Kirkland Lake in the room. So we've created this joint committee. We retain operatorship, but they have their input, and that's fair. So we're at the data sharing down knowledge transfer stage. So don't expect us to come out with a drill program tomorrow. I can tell you what we've laid the groundwork for. And I think Kirkland Lake's certainly going to look to us to lead the exploration, but they're going to want to know that we're not out to lunch, and they're going to want to agree, and they're going to want to put their input in there because, as I said, they know this district. So they're going to say, hey, maybe you want to look here. But in terms of future drill programs that we were planning, we announced that the McGarry project, and McGarry is immediately adjacent to the Kerr Addison. And I mentioned the Kerr Addison before. It's now about a 5-6 million ounce, 1 gram deposit right on the border of Quebec. It was the Macassa of its day. McGarry is immediately adjacent to it. It's kind of almost an exact proxy to our Kirkland West project. Kirkland West got a lot of attention because it's immediately beside Macassa. Well, the McGarry is immediately beside the Kerr Addison. We did, for the first time ever, we did a mobile or an MT magnetotellurics and an IP survey across the entire property. Had never been done before. Long story short, what this technology allows us to do is see between 600 meters to 1.5 kilometers. So deep stuff. This is not, you're not going to find the magic vein at surface on these properties because it's been picked over for 100 years, but it hasn't been looked at depth. So I think that's going to be a very compelling, if we can, depending on the results of that, if we see some interesting anomalies, expect us to drill test those and look for the extension or an ore body comparable to Kerr Addison. Obviously, that's a very bold statement, but that's the district we're in, and it's never been explored in that context before. And I think the whole area is lighting up. We got our neighbor is drilling their property on the Fern land. They're getting very interesting mineralization. They're looking at widely disseminated near surface material, which again, the Kerr Addison is defining. We haven't looked at that prospect really. So that's something we're going to be evaluating. The truth is we have more targets than we used to have money to drill. But now that we have this new partnership, I think that has the potential to change.
Okay, but that's the bit that concerns me. It's like you've got lots of optionality, and spreading it too thin is not the way forward. I don't think you're going to do that. But you said 2 weeks ago you knew what you're going to do. It's not really going to change too much from what you planned 2 weeks ago. You just got a bit more money, and you've kind of got to get a sign off apparently from a 10% shareholder.
Well, yeah, I just don't want to speak out of turn. I haven't yet had the opportunity, or our team hasn't had the opportunity to sit down with their technical team and really understand. So, I have to give them the right to say this is what they want to do. So anyway, so that's why I don't want to speak out of turn. I can tell you what I would do, and that's we would be drilling. We'd be going back to the Knight project, absolutely, where we just finished. We got some fantastic results, 1/2 ounce material over mineable widths. We extended the zone on underneath the Tironite at depth and laterally. That absolutely needs to be followed up upon, no question about it. So that's going to be a focus. That's an Orefinders project. And then again, our McGarry, where we're beside the Kerr Addison. And we want, depending on what occurs out of these geophysical programs, we're absolutely going to want to poke holes in those. So those would be the two, priority projects there in my eyes, and we're going to relay that to Kirkland Lake. I suspect they'll agree. And then, of course, on the Mustango, it's we're just about wrapping up this drill program. Probably almost 10,000 meters. We probably have to shut it down a little early because of spring breakup is here and it's getting a little dangerous out there. But as soon as we're able to, conditions wise, we'll get back out there and drill for that extension that we're after. But then again, we've got our Omega project in Mustango, which has 600,000 assets. It's again beside the Kerr Addison. So, that has absolutely potential to expand as well. So you're right. We've got a lot of assets, which is a good thing.
It is a great thing. But as a shareholder of Orefinders, I'm saying, what are you doing for me? There's another 90% of shareholders that you need to work for. Okay. So, doing stuff which suits Kirkland Lake is not necessarily what suits your shareholders, the rest of the shareholders. So I'm trying to understand from you say, absolutely, we're going to recommend a course forward, which is the best thing for our company, and not get distracted by someone else's needs and be their extended or outsource exploration department. Do you know what I mean? I want to. Yeah. I want to make sure I think that's definitely what you are, starting to do. That's what you want to do.
No, I work for all shareholders, and I believe that Kirkland Lake has the exact same interest in our retail shareholders. And that's to find the gold, because that's how we're going to get our share price up. So that comes down to, again, the drill bit, but also great acquisitions that our company is going to do. But I don't want to get too far down that road because that's hypothetical. So in the meantime, we're really focused on the drill bit. And so I just don't want to speak out of turn before our new partner gets in the room and say, we're going to do this on this particular date. I don't think anything's going to be too different. I mean, look, we've got the same asset at mix. We've got a huge amount of data that we've been collecting through the drill bit, but also geophysical programs that we're going to be doing. And we're going to be putting our two heads together with some of the best operators around and making smart decisions and ultimately putting that money into the ground. That's where it's going.
Okay. But you know what I mean? It's like that. Obviously, Kirkland have got, bigger land packages, other drill programs. They're in the district and they're trying to understand and piece their own story together for their own shareholders. And you've got to do the same for yours. That's all I was getting at. Okay, so when can you start giving guidance to the market as to what you're going to do, how you're going to tackle this?
Well, very soon. I think that first things first, we got to connect officially with our new partners, KL, in this project. We're in the process of we've shared the data room now. The next step is for our technical teams to meet, and then we are going to guide them on where we think the best return on investment possibly can be. They're going to agree or disagree, and then we'll find consensus, and then we'll communicate to the market. I don't think it's going to be that long because we've had so much background in organizing these projects. We just need their sign off, which is totally fair, and we want their input because, again, nobody knows Kirkland Lake better than Kirkland Lake Gold.
Okay, so you still feel in control of this thing? Well,
we are in control of this thing. There's no question about it. We're seeking their input, though. Particularly, let's talk about the Macassa mine. The Macassa mine is being mined to 3 kilometers right now. This mineralization has a history of dipping downwards as you go west. So as we go deeper, who better to have in your corner than somebody who's actually mining it and has been doing that for 70 years. So the amount of savings we could achieve by having their input and say, hey guys, point the drill in this direction, see what's down there. Instead of us blindly not blindly, but sort of taking high risk drilling and going down there. So anyways, their input is going to be critical.
Okay. Stephen, as always, appreciate your candor and feedback on that question. Stay in touch. Let us know how you get on, okay?
Will do. And, thanks. I appreciate the opportunity to speak to shareholders. This is just my first foray out there to explain the deal. I have the utmost confidence in this deal. It's something we spent a lot of time thinking about, working towards, I have every confidence that this is going to add value for shareholders in terms of putting money into the ground and then building optionality on a long-term business that we're trying to build here with great partnerships. And we are going to deliver for our shareholders. I've done so in the past, and they can expect me to continue doing that. So it's as simple as that. And I'm looking forward to the future, and I appreciate your time, Matt.